Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be taking a pair, breaking it down both from an order flow and technical perspective. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move. And in doing this analysis, I will provide as much free education as possible. So I really suggest that you stick to the video to the end. So without further ado, let's go straight to the charts. In today's video, I want to speak about gold because at the moment we do have quite interesting price action and structure. Starting here on the monthly time frame, in fact, what we can notice is that we have just broken below a very strong level of historical structure support, which, now that the market has broken it to the downside, is turned resistance. In fact, this zone was acting as very strong demand and support here. The market again tested it at this level and rejected it to the upside. Once again, we got a test here. The market started rejecting. However, last month we have seen a monthly close below the zone created by this candle here. After the close below the area, this previous level of support was turned resistance. And in fact, the market tested it here as resistance and started rejecting it to the downside. So basically what we already got here was the break, retest, and currently we're seeing the continuation lower. Dropping down on the weekly time frame, what do we have? Now, from a weekly perspective, we can see that the structure is even more clear. We can easily notice how this area was acting as support, which was the previous low here, which again was respected as support here. Then the market broke it to the downside. And after the break of previous support and resistance, we expect a retest of that level before then a rejection lower, which is in fact exactly what the market did. And in a situation like this is exactly the way in which you would expect the market to respect such a level. We can also see how from a pattern standpoint, we have the impulse, correction, and continuation. When you have an impulse and you want to measure the correction, what you have to do is take your Fibonacci from the high to the low of the impulse. And we can see that the zone that the market rejected was in between the 0.618 and 0.786 of the Fibonacci taken on the weekly impulse. And by the way, I did make a full breakdown of gold when the market was around this area, explaining all the reasons for which we wanted to see this retest of resistance and then a rejection lower. And I will link in the description that previous analysis so you can go and check it out for more free education. Now, dropping down on the daily time frame, what do we see? Now, from a daily perspective, we can notice how now also on the daily time frame, the market has started creating bearish structure. In fact, this zone was acting as previous support here. The market is currently breaking below the level. If the market will successfully manage to break with a strong impulse below the support, this previous support would be turned resistance here. So at that point, what we could expect is a retest of previous support and resistance before then getting more bearish continuation, rejecting even more aggressively the resistance zones that we have just identified on the monthly and weekly timeframes. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for gold, what we can see is that with the last reports, net positions have been slightly getting increased. However, it's very important to keep in mind that this is one of the lowest readings that we had. In fact, we come from a very positive 274k net positioning. We're now at less than 100k net positions. And we can also notice how even though net positions are slightly increasing, we're not seeing longs added with the last report. We're actually seeing longs getting closed, indicating that this actually just seems like a short-term correction, because otherwise we would see longs added from an institutional perspective, which we're not seeing. Actually, we're seeing the opposite. We're seeing longs getting closed. So the increase of the net positions is just coming from take profits basically on the shorts, with shorts getting closed. So we could easily expect, if the market will go and retest once again this area, new shorts to be added at this resistance for more potential bearish continuation. Now, if the market will successfully complete this impulse and then provide a nice correction to this area, how we could be approaching this potential rejection away from the zone, and the completion of this impulse correction and impulse pattern to the downside. Now, as usual, trading is reactive and not productive. The monthly, weekly, and daily, combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for this potential rejection lower for the market to complete this impulse correction and impulse pattern to the downside. Now, if you don't know what I'm speaking about when I say valid entries and this kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you will see that you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we use in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower past the testimonials, you will see that at the moment I'm running a special promotion in which not only you have a big discount on the upfront price of the mentorship program for lifetime access, but I have also partnered with the forex broker Blueberry Markets. So if you open an account with them from your student dashboard, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that at the moment there is still time to join the offer. However, spots are limited. So if they will fill up before the timer goes to 0, still the offer will end. So I suggest that you join from here and gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. And I will see you in my next video.